Good evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Wednesday, and this is the 8th of June, 2022, 5:40 p.m., and today is the day of the playoff game I've been waiting on. You know, yesterday I was getting off. I went upstairs, putting on Give Me NBA. I couldn't believe it. I missed it by a day. I forgot that they were traveling back. I guess it's to Boston and a day off. The series is great, so I love it. I want to get serious about the markets. I saw today a wonderful interview on CNBC. And I was listening, and all of a sudden I dropped everything I was doing because the people were bright involved in it. And they were talking about where's the market and interest rates, and you have to understand, long or short term. So they had two different focuses, rightly so. The 10-year note. Let's assume that it has a couple more rate hikes. It's going to have June and July for sure, probably September. I don't think anything's off the board. But how much further do you think the 10-year is going? I personally don't think you're going to go much beyond, in the 10-year, 3.5 to 3.7, 4%. I don't think 4's in the cards, but it could be, okay? It's the short end where the Fed keeps going, half point. They'll take that low end up like this. So the curve yield's going to do this, might invert. I don't care if it inverts anymore. We already know we're in a correction in the market. You've been down in the indices approximately 20%. You're in your correction phase. I loved the interview. Then they went on to say why the stock market's going to have headwinds, which makes all the sense. And that's because as these rates are going up, especially short term, it starts choking off the money. What about wage inflation? Well, are you watching what the airlines are going through right now? They don't have pilots. And what happened is at the age of 65, there is a rule that pilots can't fly beyond that age. It's a stupid rule. It's almost to me like COVID, zero tolerance in China. Why? We're not the same health we were when those rules were put in. People are healthier. Medicine is better. Your faculties are better. Why can't the pilot go to 68, 70 years old? I'm 10 years older than that. I still feel I could get behind the wheel of a plane and fly it, okay? I'm not. It's not what I do anymore. I stopped flying years ago just because I stopped flying. But I believe that these guys are that talented. Instead, they're chasing how can they get enough out of the Air Force, or wherever they come from, train them and so on. You do what you have to do. Change the rule. Give these men that are retiring that. Do you think everybody that's retired is comfortable right now? That's the other thing I heard today. Inflation has gone up to where a lot of the people that retired weren't ready for this type of wage and price inflation that has caused their daily, and I'm talking now the retiree, everywhere they go, the food, the gas, everything costing more money. How many of them want to return back to the marketplace? Maybe not 40-hour weeks, part-time, doing whatever. They're more than capable. Way more. You don't have to retrain them. And that comes to another thing. We see on these resumes that come through, I want to work for you. How many jobs have you had? Well, in the past 2 years, I've only had 3 jobs. I don't want to hire that guy. He'll say, well, it wasn't quite what I wanted. I want to learn more. No, what he wanted to do is be trained on everything you have so they can move to the other guy and let him train him, and he thinks his worth is going up. But me, I'm the employer. I'm the guy losing money on him. I don't want that guy. Guess who I want? I want the older guy that wants to be stable already. He's really looking at us. Can we do for him what he wants done? And he's more realistic with his career. This is what inflation does. I have been through this horn before. This is not my first rodeo. I've been through serious recessions. I've been through wild inflation. I remember in the 70s and 80s, inflation where what I was earning on money was insane on a bank account. 10%? Come on. Why invest? It was nuts, okay? I can just tell you what I went through. And it was wonderful, all right? But you remember, and that's where you're at right now. Now, when we get to the marketplace and the S&P, I don't have a problem with the rally developing if it wants to. If the market wants to go towards the 18-week average at 42.68, I applaud it. It can happen at any time. You had a 20% drop in the market. You can get bounces of 10% or more. You're not going to retrace from here to here in this environment. I am wrong, very wrong, if that's the case. The odds of it happening are minute, if not there at all. Could it happen? I'm never saying nothing can't happen. I've been around this too long. When I look at the action right here, this is a market marking time. I don't know what it's waiting for, one way or the other, but it's waiting on something. Could it be tomorrow's European Central Bank announcement? I doubt it. Why would that be it? It could be the CPI number that's coming out on Friday. It's going to be hot. Is it going to show that we're running at 8% inflation a year, 8.4, 8.5? I don't know. But it's going to be a hot number. Is that enough to tip the market back? Or do they say, oh, it came out with the 7 in front of it. It's not as hot as we thought. The market can handle more of a bounce. I don't know. Then next week, you've got the FOMC meeting. I don't see where that should impact anything, to be honest. Normally, I say be scared of Fed meetings. I would say 99% of the time, not this time. The Fed is going to go a 50-point hike. The conversation's going to be hawkish. That's what the notes will show, because they're not going to be dovish going into the July meeting. They've already committed to another 50-point hike. I mean, logic just tells you what it's going to be. I wouldn't be too worried about that. When I look at the action, I can make an argument here that you've got higher lows but lower highs. That's about all that I could say with it. The market's staying over the 18-week average. If it breaks out to the upside, one of the resistance points is 43.04. That's pretty interesting. We were looking 42.68 on the weekly chart, and the Bollinger Band is even more interesting. The combination of this number dropping, and it will, this 100-day average is going to drop every single day. Why? Because you're losing numbers back here and replacing them with closes of numbers way down here. So it's going to drop every single day for a long time. Do you understand that? It's got a long way to go. As that occurs, it's going to get closer, and that's your other resistance zone. So in my mind, I've already got a game plan that no matter what it does to the upside, it's probably limited in that general zone. Do I have a reason on this chart to be short? No, I don't see one. Now, let's talk, if we could, for a minute here on what is going on with the slow stochastic. Did the market embed on June 9th? Well, it can't. It doesn't matter. All we care about is what did it do on Wednesday? Both numbers were over 80. What did it do the day before? They were not over 80. So what do I have on the market? I don't have an embedded reading. I have an overbought market that can't embed at this point. It still has bullish bias, and if it rallies, I have an idea where I think all the resistance will come in on the market. In the NASDAQ, not an embedded reading. I have a higher high, lower low pattern. I don't know what to do with the market there. I don't see a trend, but I see the sideways action identical to the S&P. The Dow is different. So let's take another look, if we could, in this. In this one, did we embed? So let's come over where the numbers first begin. Okay. So both numbers are not over 80 on Friday, but this is Wednesday. Both numbers were over 80 on Monday, Tuesday, and Wednesday. It embedded. Embedded means you've converted the market from overbought to locking in a bull trend. It gets very bearish if you get a reading on a closing basis under 79. That would call for a price to go back to the 18-day average, breaking the current uptrend that you have. If the market wants to rally from here, it's probably getting bought by the pros at this point. This is tonight, looking for the zone that we just discussed in great detail, okay? Let's call it the 3,300 level, 3,260, 3,300, right in that general zone. Notice how fast already, and remember what I told you, how the 100-day is going to drop. It's already at the Bollinger Band. The nature of, because prices have been going up, the Bollinger Band is still accelerating slightly to the upside. Both numbers are pretty strong resistance area, though, for you, right in that 33,720 level. Okay, so I think that the pros will buy. I think they'll get out if the red line closes under 79, and that is their target zone. You can see how it's today. I'm just going to show you that. There's your cross again. Okay, so this takes us to the Russell. It's 2, has an embedded reading. Where's the resistance? The combination of right now, 1942, which is the Bollinger Band, and 1961. That's it. Are the pros buying? Yes. And I think they'll stay buying until the red number of the slow stochastic, which is 87.59, has a settlement under 79. That's what I expect. Next, we go to the VIX cash. I had a great question come in today. One of my clients wrote me and said, Ira, if the VIX is going down, should the stock market be going up? Obviously, you've learned what I've talked about. Yes. Plus, you have a bearish embedded reading. So on these rallies, and he's a subscriber, so he knows the numbers on my morning subscriber video, not the ones you see for free on YouTube, but on our website is how that works. There's been a sell number, and they're working at this point. But I've also said to you very clearly, I expect the pros, if you get to 22.89, the 200-day average, to the lower Bollinger Band, to do a lot of short covering, not all necessarily, but a lot, and right puts, thinking you're going to get back to the combination of 2660 to 2701. That's my guess as to what they'll do. In the bonds, you got to bounce away from the first challenge of the lower Bollinger Band in an oversold market in a downtrend. Gee, am I surprised? If you've taken the enhanced Bollinger Band course, it teaches you this whole play. What's involved? That whole play, this whole thing unravels and you go, wow, I see that on spiders, ETFs, stocks all the time. Why am I not paying attention to that pattern? Duh. Now you get to the 10-year note. Oversold, went from upper to lower Bollinger Band. The pros are covering shorts. I know, you know, the Fed's going to raise interest rates next week. So what? You're trading the market. You're not trading the Fed. You already know what they're going to do. In the dollar index, where's the resistance? Well, what the market did is it came from hitting the Bollinger Band, swept around, and right back to neutral. Is the trend up? It is at this point in time. You have higher lows, higher highs. So the bias is to the upside at this point. I personally don't want to go through a CPI number, so I'm not going to tell my clients to buy it going into that. I can tell you that. The CPI is the big number to be worried about this week, not the Fed next week, in my opinion. It's Friday's CPI number. How hot is it, or how hot isn't it? I don't know which one we're going to see. In the euro, you've lost the embedded reading. The odds favor price and the 18-day average are going to come together. I think the pros are selling. You heard me, going short in this. Would I tell a client to go into whatever Miss Lagarde's going to do tomorrow? No. Why? Because she's a wild card. We don't know what she's going to say. Is she going to surprise you and go to 50 basis points? Then you got a different game. You don't know what to expect. Back away. In the British pound, you're void of trend. You have a higher high, lower and low scenario, momentum down, but because you're over the 18-day average, bias up, and you're narrowing in the black lines of the Bollinger Band. So long, I don't have to be involved in that. I have been adamant in telling you the resistance in Bitcoin is right here, and I'm also going to stay just as adamant. This is going to create, this current sideways action, a monster of a move. I don't know which way it's going to break out. I'm going to repeat. I wouldn't do it in June, but if there's viable options, you might want to straddle something like that, buying for an up move or a put or a call. Certainly not a strangle. Then we get to Brent versus WTI crude. I think I've done it right. Yeah, that's Bitcoin, and we're coming right in here. Breakout to the upside, so Brent got stronger. Okay, I can live with that. But here's the market running the upper Bollinger Band embedded. Doesn't even break to let you in. Only one market has let you in. It's gasoline. Same thing's going on in WT. No, I want no part of calling a top in that. Gasoline to me was a buy yesterday. Not today, yesterday. You have the big rally off it yesterday. I know what I was telling my clients, and I think they're happy. They should be. It's a big move. And you can see how you still have an embedded reading. I'm still looking to see, can you get to the upper band at 437.74 or the window envelope up there? There is a window envelope. I don't show those here. Window envelopes are deviations from the 18-day average. I have my own unique way of doing it. The traditional way is the market's got a historical 2%, 3% deviation, whatever number you come up with. Mine uses the swing line to determine the window envelope, and it moves with it. And boy, I find it so much better than the traditional way. Natural gas. Okay, Should you have been buying natural gas against the Bollinger Band? I don't hear you. The answer, of course, is no. Okay? Why? The odds of staying over that number 5% of the time. However, is the trend down? No. So I think the pros stepped in, and they might have nibbled today at that 863. It's too much risk for somebody like me. The setup's not there to risk back to 820, 660. But forget money, and the chart pattern is saying, yeah, that's where the support is, that's where the resistance was. And what broke the market was, of course, the fire in Texas. 16% of the exportable gas out of 7 terminals in the U.S., 16% is now not available for export. That's going to hurt natural gas prices in Europe, but in the U.S., that gas has to do something. It'll go back into the domestic market, and that put the price down. Does that make sense to you? But that's basically what occurred. So you put it all together and you come up, or you try to come up with what I call game plans. And that is where you take what we do as brokers and come into the game. Let's stay with the natural gas. Did you get a call from your broker? Hey, there's a fire. You have a position. Maybe we shouldn't be in it. Or, hey, you got out perfect. The market's on the downslide just as we thought. I don't think so. I think you're there and you're saying, I can do it on my own, and most of you can't. I understand you want to, but I own a brokerage company, a division. You can't. I've seen it. But you can get help. You can do it very cost effective. You can have some trades you make on your own out of the same account, other you work with the broker. It's easy to work all this out for you. It is not a problem. Take advantage of it. Our brokers have years of experience. You heard what I told you about with the pilots. What do you think our brokers do? My typical broker with me has over 30 years experience. These guys have been around the horn. They know what to expect. They've seen it. They've done it. They can explain it. That is the difference that you don't get sitting there at home by yourself going, what just happened? Gee, why didn't it go up instead of down? What's going to happen? We lost that natural gas. 866-973-2077. I know it's the evening. Leave a message. I promise you we'll call you back. I'm Ira Epstein. You have a great day. Talk to you tomorrow.